Mike knows this. I don't know if the audience knows this. I mean, you did me a favor, right? I wasn't going to break us up. I was going to stick in that bad marriage for as long as we loved each other and we were doing it for the kids, right? So I remember where I was when I got the phone call, and I was 2 hours behind, so I was still waking up because I was in Arizona at a Housing Wire event. But what's really cool is 2 years later, we've had a chance to look back, reflective, right? We've had a chance to experience living in someone else's house and being married to other types of people from a business standpoint. Ladies and gentlemen, boys and girls, children 18 plus, you are tuned in to Lone Officer Podcast with me, Dustin Owen, and a very special guest. This guy was once called one of the most athletic pitchers in all of college baseball during the College World Series. This year, 2026, he will end up funding over $1 billion in career mortgage volume. He is a good friend of mine. Some would even say family. He's one of the best originators I've ever been around, and he was my managing partner for 17 years. You are in a treat today when I get to interview Mike Smalley. Mike, welcome back to TLOP.
Thank you. I wasn't expecting the ESPN Harold Reynolds analogy, but I will take that anytime I can get it. 25 years later.
We all know Mike will because every year on that date, he has this like screenshot of a VHS recording of him pitching in like the 11th inning of like game 2 of the College World Series.
So it was the 1999 College World Series semifinal.
So just a couple years ago.
Like 3 or 4.
Hey, by the way, real quick, we do have our producer extraordinaire with us. We call her Special K. She is Karina Mojica. Karina, hello. Welcome back. Great to see you.
Thank you. Good to see you.
Hey, question for you.
Yes.
What were you doing in 1999?
Whatever my dad was doing.
You weren't born yet.
So, exactly. That's where I was. Whatever my dad was doing.
You were actually, little biology lesson. Whatever your mom was doing.
Not my dad?
No. Your dad, he gets rid of that on a daily basis. Your mom, she was born with those eggs.
Yeah, that's true.
Yes, so you were doing whatever your mom was doing. Yeah, you weren't even born yet. Funny. That's crazy. All right, Mike, sorry about that. I forgot to invent. I forgot to introduce Karina. At the same time, I was thinking, wait a minute, this was 99. Karina wasn't even born yet. But okay, so the year is 1999.
So dude, we're so old that like we did things that were on VHS back in the day.
Yes.
Right. So that's an indication of how long we've been around.
No, but what happened? I mean, I introduced you that way. You started telling the story. I interrupted you.
Yeah, so it was the College World Series semifinal game, extra innings against Stanford. I made this really athletic play. Harold Reynolds, the ESPN announcer, gave me credit as an athletic pitcher. Pitchers don't get called athletic very often, so it was on a VHS tape. So years ago, I went to my mom's house because she was the only person that I knew that had a rotary phone still and a VHS tape. So I was like, hey, Mom, throw this in the VHS. Yes, I know there's like services where you can take a VHS and digitize it or whatever, but this is like 10 years ago. I took my first iPhone and recorded from my iPhone the VHS tape. It's all blurry and fuzzy, but yes, it's like June 15th was the anniversary.
Okay.
So as an annual reminder to my wife that her husband was once a very good athlete, that gets posted on social media somewhere.
It does. So make sure you befriend Mike Smalley on Facebook, and I promise you, you will you'll see that clip. But yeah, I mean you pitched for Florida State, you pitched for UF, and later were drafted by the Braves. That's a little cool backstory.
It was, yeah. I think honestly, when I played for the Braves, I made like $3.12 an hour probably. Like there's no money as a minor league baseball player. But the lessons you learn from being an athlete. I mean, you're an athlete, right? Like hard work, dedication, not having a fear of failure. Those things can carry forward into whatever business you choose.
Yeah, and he was a pitcher. He did get to pitch in College World Series, and yes, I've seen the clip every year for the past 10 years. And what happens? He throws a pitch. There's like a dribbler. Mike like dives for it, and then gets up off the ground. The shot was between the pitching mound and first base. Yep. And ended up making the play. Like during a game that it was extra innings.
It was pretty legit.
It was pretty legit.
Not gonna lie.
Yes,
we'll take credit.
Yes, and Harold Reynolds does say that's one of the most athletic plays I've ever seen a pitcher make.
He does.
Yeah, so very cool. You guys are in for a treat. So I kind of said this in the opening, but like Mike and I were managing partners for the past 17 years. So anyone who has seen me go around, speak on stage, and I talk about how I help build something from $40,000 a year to $40,000 a month to later $1 billion division, right? It wasn't me. It was me, it was Mike Smalley, it was David Holbrook, and there was a cast of characters that we had working on our team that helped us get there. Mike and I were chatting offline like we tend to do, and we're like, you know what, it'd be a good episode if we actually told our story, especially now that because Mike works at Cross Country Mortgage, and I've gone all in on all things TLOP. And then there was a year that Mike was at Cross Country, I was at Lower, and David was still back at Waterstone. And after 17 years, our partnership was no longer. There's a lot of lessons to be learned. So we're going to talk about that. We're going to dive into some nitty gritty, maybe even share some stories that you all have never heard. But more importantly, talk about the lessons learned.
And Dio, how to get into one.
Yes.
Right? Like how to make it successful. But then also, like, when's it time to go your separate ways? Like, there's a point in everyone's career where, you know, you're on different career paths, and it's like, well, don't keep it together forever if you guys are going different directions, right?
That's so easy. Like looking back, and we're going to get into this. I'm probably going to have to stop the show in order to like let the hear from today's show sponsor. But before we hear from today's show sponsor, yes, because like anything, hindsight's 2020. You can Monday morning quarterback anything, but I can look back and I can tell you it's probably 2019 would have been like that moment that if we sat down and had a heart-to-heart powwow, maybe even brought in a third party, we could have either stayed together longer or, right, we maybe would have seen the writing on the wall to do things earlier.
Right.
Because as I joke with people, what had happened was we were no longer in love, but we loved each other. Like so many marriages, we stayed together for the kids. Like that's how I explain it to people. Like, look, I love those two people like brothers. We weren't in love those last 4 or 5 years. We definitely loved each other, which is why we probably stayed together for as long as we did. Plus, we had about, 120 children and 9 homes, meaning 9 branches, 120 associates. Like there was more than just the 3 of us, which probably also kept us rocking as long as we did. But real quick, let's take a pause so we can hear from today's show sponsor. Y'all, something big is happening at Lower Mortgage. And if you're paying attention to this industry, you've probably noticed. In just the last month alone, Lower has added some serious horsepower. We're talking top producers representing over $350 million in volume. These aren't rookies kicking tires. These are heavy hitters who've done their homework and made the move. That should tell you something. On top of that, Lower just acquired Movoto, a top 5 real estate portal with over 150 visitors just last year. Before that, they brought in Neat Labs, and now they're launching Lower OS, a next-gen mortgage platform that's cutting loan delivery times down to 10 days. This isn't a company standing still. Lower doubled their volume last year, and they're projecting another 40 to 50% growth this year. The best in the business are taking notice, and they're voting with their feet. Here's the reality. The companies that are going to win in this market are the ones investing in technology, building real infrastructure, and competing at scale. Lower is doing all of that. They're going head to head with the Rockets of the world, and they're built for originators, not against them. If you're a producer who wants to be a part of something that's actually going somewhere, not just surviving, but growing, this is the moment. Lower Mortgage, the momentum is real. All right, so now that we're back, I want to get into that, Mike, but I also want to talk about your career because you were sharing with me last night, you think this is the year that you cross over $1 billion in career originations.
Yeah, like because we're both old and, we probably don't have every bit of data from, 2002, 3, or 4. But yeah, I've done 50 million pretty consistently since like 2012. So in a bunch of years, above that. But yeah, this is the year. I've kind of thought it was like 950 last year. So yeah, it'll hit $1 billion, which is a pretty cool number. It's certainly there's people that dwarf that in comparison.
Correct. Yes.
But there's not many people that have done $1 billion in their career. So certainly something that we'll be proud of.
I would guess it puts you in the top 1% of 1%, right?
Yeah, maybe. We'll see.
Yeah. And because last year you did what? What was your 2025 personal production?
Last year I did 53.5.
Okay. So you did 53 million in personal production,
Yeah.
But you have 2 or 3 branches plus a couple of originators who work for your branch. Collectively, what did your group do? 215. Yeah. So, for those comparison purposes, Mike's 53 million in personal production puts him in the top 1%, and his 200 million in group production probably puts you easily in the top 2 or 3% of all branches as well as all originators throughout the country.
Sure.
Cool. So Mike's lessons and Mike's journey, there's going to be a lot of takeaways and tie downs and things you're going to want to write down and implement yourself. So I want them to get to know a little bit about you and your story and maybe some of the lessons that you've learned that you can share. But would you rather start talking about partnerships in general, and then maybe we'll close it out with just some learning lessons from Mike Smalley's 20 plus years in the mortgage industry?
Yeah, let's just jump into partnerships and kind of how we got rolling.
Okay, so let's go back to the very beginning. Why did you enter into a partnership? This is a cool story.
Yeah.
Like how did David Holbrook and Dustin Owen enter into your life?
So we met, so David, our third partner, was my high school baseball coach. And he's, we call him coach. He's 11 years older than us.
Retiring this year.
In May.
Yes. So good. So happy for him.
Yeah. I wish it was me. Got a couple left in me. So I got in the business before you guys. You guys met in training at Home Bank, which
we
I
did.
think
Yep.
you probably talk about on the show. Great company, great culture, great place to learn the business and get great training. But we all met really kind of post financial crisis. Like I was a broker for my first 4 years, I think. All my wholesale lenders are going out of business. It was a really tough time to be a broker. You guys were at different companies, and they're both going bankrupt. And basically,
not personally yet, but the companies were going bankrupt.
The companies were going bankrupt.
The companies were going bankrupt. I mean, don't get me wrong. David and I may have been like 1 or 2 paychecks away from going bankrupt.
Yeah.
But no, the companies were going bankrupt.
The like canceling the cable bill, right?
Yes, that's part of my signature story.
Yeah, canceling the cable, like
deferring student loans, driving around with a for sale sign on my truck. Yes, I've done all of that.
That saved you from chapter 7. But
yes.
Chapter 11 wasn't. The companies weren't saved from that, but. I think we kind of partnered up through desperation, right? So I had a friend, Brian Clute, in Wisconsin, who worked for this little mortgage company that was owned by a bank. And post 2008, having a bank ownership was important for a number of reasons. Licensing a little bit, but really just kind of security and capital, having some backing, having your own warehouse lines. And so we found Waterstone kind of by chance. We were not recruited. We had to beg them for a job, basically. Can you please take on this? These guys in Florida. 3 unknown dudes. And so we kind of got together out of desperation, needing to find a place that felt stable because we were in the industry in a period of incredible instability. 2008. You didn't know as a broker if your wholesaler was going to be in business tomorrow, if you were in retail or net branch, if your parent company was going to be in business, and so that we kind of found stability. Never really thought it was going to be a 16, 17 year journey, but we got lucky. I think you always say lightning in a bottle. We caught the right company at the right time. Yeah. When we got together in 2008.
Well, there's a couple things too. I remember you telling the story. You had this coach. I'm gonna give a shout out to Tom Ward. I think Tom's probably retired by now, but wasn't it Tom that actually encouraged you to take on partners because you were running your own broker shop, keeping your head barely above water?
Yeah.
And Tom's like, in my words, I would have said, "Hey, Mike, would you rather a whole grape or a slice of watermelon?"
Good, yeah.
And and it was probably Tom that gave you the encouragement, which is a lesson there, the power of having a coach, the power of having a mentor, someone, an elder statesperson with a different point of view that can maybe push you in a direction that you wouldn't otherwise go yourself.
Yeah, and I think a lesson for any newer originator and really people that are experienced is you have to invest in yourself. And even in those early years, like 2003, 4, 5, 6, when I was struggling and you were struggling, I joined Loan Toolbox, right? Which, I got coached by Tim Brahim and Kai McBride and paid Tom Ward to do coaching and things like that. And I think that kind of set us up for success over the long run. We were not very good when we first started. Tom Ward told us that we should put .org next to our URL on our website. .orgs are nonprofits.
Yeah.
So he's like, you guys make no money. You should be a .org. I was like, what does that mean? And then he explained it. And I was like, that was a put down, I think.
Yeah.
But advice that we needed. But I think one thing that when with our partnership when we got together, I think we spent 6 months meeting every Wednesday in my little conference room, kind of mapping out what.
Prior to partnering, yeah, we met for at least 6 months.
Yeah. It's like you got a date before you get married.
Right? Correct. And even when we got into it, here's the deal: like there were no contracts. It was if you're unhappy, you can leave at any time. Right. If I'm unhappy, you better believe that I'm going to leave. And here's a sneaky story that Mike fails to mention. He may have forgot to tell some of those people at corporate that David and I were his 2 partners.
That's not true.
It may have taken him 6 or 9 months before he finally. Yeah. Okay, Karina, check this out. So David and I are on board, right? So Mike went to Waterstone Mortgage before David and I did, and that was because Mike needed to. David and I weren't being forced out, but we knew we had to leave our other company in order to achieve our business goals and our sales goals. So anyhow, we're there for at least 6 months. Every time David and I would call the corporate office for help, they'd be like, you have to call your manager, Mike. You have to call your boss, Mike. And believe it or not, for as fiery as I am, and for as like middle of the road, his pendulum never swings
David
left or right.
Hated it.
His pendulum doesn't swing, right? You know me long enough. I'm pretty fiery. I could sit back and I wore it. I was like, whatever. I kind of shrugged it off. David, He's like, what? Mike's not my boss. We're business partners. So it took almost an entire year for the corporate office to actually acknowledge that David and I were Mike's equals, because they had it as if we were like working for Mike. So I like to give Mike shit.
Point of clarification. Okay, I went 6 months early because I was willing to take the risk.
Okay,
That's my story.
True story. David and I did say you jump first, and then if the water's not too cold, and you haven't drowned, then we too will go.
But I definitely enjoyed when David would walk in my office a little bit pissed off and be like, "These people think you're my boss." That was kind of fun.
But you know what's fun in the early years? Because in the early years, like we only did 40 million that first year, like collectively, David's production, my production, and Mike's production combined 40 million.
Yeah.
Right. Mike last year did 53 million all by himself. Right. So at 40 million, now granted back then average loan size was 130. Today yours was probably like 360 last year.
Yeah, probably
closer to 400, yeah. Right? So I guess there's a little bit of like we should skew it for the volume. Mm-hmm. But no, something we did do early on is when we needed to have a boss, like let's say there was a pissed off realtor, right? Like Mike would be like, hey, let me go grab my boss, Dustin, and let him talk to you. And it was always nice to have someone come in and be like, oh, yeah, Mike's a great guy. Sorry he made a mistake. We'll talk to him about it. And we would use that in our advantage. Here's one thing, Mike, that I learned from our partnership. And I can't say I went into the intentionality. I think the one thing that we did well is all three of us got up every morning, we put on our uniform, and we worked, right? Like, now, I can tell you after 17 years, the work that I was doing was not always the work that David and Mike wanted me doing. The work Mike was doing, I can promise you, I wish he was doing other work. And Mike can say the same thing about David. But the good thing is we never had to worry about the other one not working, the other one not giving their all. And I've now been in several partnerships later that I've been in some where I was like, WTF, what is homeboy doing? And that's a bad place to be. And I think that's a luxury item that we had.
Well, and I think, like we're talking about partners because we like kind of owned a division, if you will, together.
Correct.
Like,
we did.
Like everybody has partners, like, your teammates. Like I have loan partners that are my team. They're my partners. Loan officers, branch managers in my group are partners.
Your executive assistant. She's probably in a certain role partner.
And I think the key is that you have to surround yourself with A players that have the same like desire and grind as you do. Like one of the reasons why I went to cross country when I left is because I love the culture of just the hustle and we want to be the best at everything, like in Scott Foreman, who, was my connection to cross country.
And you can say he's one of your partners now.
For sure.
Right? I mean, he's your boss, technically.
If I need something, I call Scott.
Yeah.
But like, I want to be surrounded by people like that, people that push you to make yourself better every single day.
Yeah. And I think the one thing that we learned through our partnership, well, one is this. Just know that not all partnerships have to be equal, right? They don't have to be equal in pay. They don't have to be equal in responsibility. They don't have to be equal necessarily in effort.
They have to be fair.
They have to be fair. Yes. Yeah. But fair doesn't always have to be equal. I mean, there were times in those early years, Mike and I were in the office for 12, 16 hours and David slid out. But then there was times, especially during COVID, David's in the office 16 hours, right? I'm putting an 8-hour day. Right. It's just different seasons of life, different seasons of our career. But, when you look at partnerships in general, because an LOA can be your partner, because you can have junior partners or minority partners, partnerships don't always have to be equal. They don't have to always like pay the same, but there should be a certain level of respect and care, right? I care that you get up every day, you give it your all, and you're accountable to us and you're accountable to yourself. I think that's important with partnerships. Something you said earlier, Mike, I actually have a presentation, and it's the 10 lessons learned over the past 5 years. And it started with me telling the story about TLOP, honestly. Like everything I learned from doing 500 plus episodes of the Loan Officer Podcast. And I did it first for Sales Mastermind last year. So I went out to Vegas, did it for Sales Mastermind. I've tweaked it since, but I have a slide And that slide is the second slide, second lesson learned, is find a partner. Mm-hmm. And when I started thinking about it, like my first partner was my sister. Now, I would never tell her she was my partner or call her my partner until I realized what partnership means. Mm-hmm. She had my back. She was always there for me. Mm-hmm. She understood something that only I understood, like what it was like to be raised by Don and Cindy Owen, what it was like to live in our household. And then I started thinking about, well, my marriage. Well, my wife's my partner. My wife is not my business partner. In fact, I kind of I don't like talking business with my wife. Yeah. We tend to get into arguments when we do so. Yeah. However,
as a partner, she's got to support you for you to be successful in other things.
Yes.
Like if Michelle wasn't supportive of you getting up in the morning early and training, you wouldn't be doing half Ironmans.
Yeah.
Right?
Yes. I'm doing my first full this year, going to Portugal.
Really?
I'm taking on the bad boy, nice. The big one. But no, like it may have took allegedly maybe a year or two of marriage counseling to have a marriage counselor point out to me that, hey, homeboy, you never once had to worry about who was going to watch the dog when you went to that conference. Mm-hmm. You never had to worry about who's going to make sure the kids got up for school so you could go do that branch visit. You never once had to worry about whether or not you could stay late at work or whether or not you had to leave work early to go get kids from school or daycare. Because I had a wife that was supporting me. Yep. And I was like, damn, she was a business partner. And then I started looking at everything else like, I don't think I would have, in fact, I know I couldn't have. I could have, but I wouldn't have done what we did without you and David, right? Like I just wouldn't have. Yeah. Not that I couldn't. I needed your perspective. I needed to know that if I didn't show up to work, I wasn't letting me down. I was letting you and David down. Mm-hmm. And then I've had a partnership in a real estate investment company. And then the only reason why TLOP is going to do what it's going to do is I had to go grab two partners. Like I had God, if there's a God, he put Stephen Barnett in my life. Mm-hmm. And then Stephen Barnett introduced me to Mike Siciliano. And, just like JC was put in my life at the right time and Aaron introduced me to Mark, like I learned in order for TLOP to be everything that it can be, I'm not going to do it alone. Mm-hmm. I'm going to do it with Steve and I'm going to do it with Mike. And then we still have JC and Mark who are equity owners as well in the company. So that's a little bit of what partnership has meant to me. What has it meant for you in terms of team building? Like your production team?
Well, I think everybody has certain like unique abilities that they're good at, right? Like things they're good at and things they enjoy doing. And so like with my personal business, there's things that I enjoy doing. I like doing a consult with a customer. I don't like reviewing documents. Like I like having a team member that I can trust that, they've read the pay stubs or the tax returns or whatever, and they've checked the bank statements for large deposits. I don't enjoy that stuff. Maybe like early in my career I did, but you get to the point in your career where you've done something over and over again and it's redundant and you need a new challenge. Building a team was all about delegation, clear delegation of what's expected, and then everybody having the roles and responsibilities. Like we grew to $1 billion because, David was the ops guy, like I was the production guy, and you were the sales and recruiting and HR guy, yep. Right? And we all did different things and we all kind of crossed a little bit, but like if we didn't have each of us doing our own role, like we would have never got to that, that level. So, and whether that's day-to-day management or attracting recruits, like some recruits wanted a great operational process, they needed someone like David, right? Someone wanted a great scripting and sales guy, they needed you. Someone wanted to be pushed by a top producer, they wanted to be around me. Yep. So, I think defining our roles within that partnership, I think was important and helped us scale and grow.
It was something we had to do in those first 3 years. Mm-hmm. And it's interesting the way that we approached it. I mean, there was once a time that we thought I was going to be the ops manager. Y'all, I don't have the personality for it. I mean, I am big love, but I'm also big attitude. And you never know which one you're going to get based on which way the wind blew. Mm-hmm. David's pendulum never moves. Mm-hmm. So I think, adopted my process for submitting files. Like as an originator, it's like, oh, he's pretty dialed in. He's buttoned up. Let's follow his process. Mm-hmm. And I think what we did well is, although we went in with ideas, we weren't so concrete on those ideas that we weren't like willing to be flexible. Right. And then as the chips fall or as the universe speaks, we fell into our roles. And then what we had to do really well is like you didn't even approve your own lock shortages. You didn't even, although Mike's the top producer, Mike's one of the head guys in this $1 billion division, we understood roles, responsibilities, systems, and procedures. And we had the same person handle everything, because if we didn't, I mean, we at one time in the early years had 4 branches. Let's say we had 36 LOs, we couldn't have all 36 LOs not knowing who to call and when to call them. So I think the lesson would be defined roles.
Yeah.
Like we quickly realized we had defined roles. We also quickly realized we didn't need 3 recruiters or we didn't need 3 ops managers. Someone had to handle ops and P&L. Someone had to focus on production and leading from the trenches. And then that left someone else saying, well, who's going to onboard, offboard, who's going to work with marketing, et cetera. And that was a role that I was willing to embrace.
That applies to loan officers that aren't running a team or a division or something big like we did. Like you have to have clear defined roles in your loan process. So I was on a call with a guy the other day, a coach, and he shared a lesson with me. And he said, if you're not doing as much business as you want to do, it's one of 3 things. You're not calling enough people, you're not calling the right people, or you're not saying the right things. And I think a lot of LOs, they struggle with all 3. We all do. But a lot of LOs struggle with the first. They don't call enough people. They're not prospecting enough because they don't have clear defined roles with their team loan process. Like how many loan officers and people watching the show or people that that you guys coach are like tracking down their own conditions or like calling the borrower when the appraisal comes in. Like they want to do every single thing, and you're never going to scale your production to a level that's going to make you happy and really like reach your potential unless you can build a process. And so like we built a process with a big division as like a management process, but individual loan officers need to build that same thing with their individual business.
Yeah, I would, Dan Martell taught me when I read his book, Buy Back Your Time, 100% done by someone else is 80% awesome.
Yeah.
Right? Like when you're talking about
perfect is the enemy of done.
Yes.
Same thing, right?
Yes.
You and I both say that all the time.
Yeah, I don't need to get my own conditions.
Yeah.
I need to train someone to get conditions, and they don't even need to be as good as me. They need to be better than my competition.
Yeah.
That's what's important. Are you better or as good as my competition at getting conditions, even if you're not as good as me? Because that's not really my job.
I use like a specific example of that is when an appraisal comes in low. Most LOs are like, I got to make that phone call, and it's my relationship, and I got to wear that one. Most people in the transaction are not going to blow up on you because of a low appraisal. Like they've had it happen before. And so years ago, I figured out like, okay, what are the 3 outcomes, right? Boom, boom, boom. Let me teach someone how to explain the 3 outcomes. Okay, now forever, I have delegated the responsibility of a low appraisal phone call. And I haven't made a low appraisal phone call in a decade because 10 years ago, I said, here's the 3 things that could happen. Teach someone that and then put it in their job description and repeat it. And you can do that with every step of the loan process. And, LOs are never going to get to the point where they want to be unless they can start letting things go and delegate and handing things off to team members.
You know who does that better than anyone I've ever met? You met him today, Mike Siciliano, right? On the show, we call him Marketing Mike because he is that guy, is the marketing guy. But I fell in love with him as a business person because that guy has a true SOP, a playbook, and a checklist. I mean, Karina knows it, right? I mean, he's not just your brother-in-law, but he's your boss the past 3 years. If you thought I was a dick to work for, I promise you, he's a bigger dick, but in a loving way. It's just, we're very regimented. We like things a certain way. We're particular, but if you follow our way, you tend to get excellent results. And it was every reason why I was like, yeah, I need you. But also I like having that person on my team because I found someone who I felt like was stronger than me and brought him in. I want to ask you this, looking back, because we've been divorced for going on 2 years. It'll be 2 years in what, April?
Yeah, I left middle of April of 24.
Yeah, and Mike knows this. I don't know if the audience knows this. I mean, you did me a favor, right? I wasn't going to break us up. I was going to stick in that bad marriage for as long as we loved each other and we were doing it for the kids, right? So I remember where I was when I got the phone call. And I was 2 hours behind, so I was still waking up because I was in Arizona at a Housing Wire event. But what's really cool is 2 years later, we've had a chance to look back reflective, right? We've had a chance to experience living in someone else's house and being married to other types of people from a business standpoint. Looking back, what are some lessons that you learned that you wouldn't have learned had you not left? Or you know what? Hold that. I need to pay some bills. Let's take a quick pause so that we can hear from today's show advertiser. Check this out. What's up, y'all? If you're truly serious about leveling up, breaking through, or bouncing back in your career, more than likely, coaching is going to make sense for you. Rarely does someone achieve the highest level of success by themselves or on their own. They always have some form of a partner, a mentor, or a coach leading them down the right path. At TLOP's Originator Coaching, you can come and allow us to invest in your future success. There's a reason why we are deemed the #1 coaching community for loan originators. For a small investment, you will be given access to 4 live coaching calls per month. On top of that, we're going to give you 4 live sales trainings per month. And then every Monday, Wednesday, Friday, for 3 hours every day, we have a coach on call. This is your opportunity to get one-on-one for 10 or 15 minutes with either me or one of my certified coaches to go over your unique scenario, your unique idea, or to get feedback on something that you're working on inside of your business. It's free to check us out. Go to our website, tloponline.com, click on the coaching section, and see the various ways that you can let TLOP invest in your future success. All right, so now that we're back, what's something that maybe you've learned over the past 2 years that you couldn't have learned while you're still in the moment, but now that you're out of the moment, you can reflect on?
I think we took a lot of pride in being at the same company for a long time. 16 years, you were there a little bit longer than me. And everybody should take pride at longevity at a company. That said, you shouldn't put the blinders on and not open your eyes to what else is out there. Not with the intention of leaving, but maybe with the intention of, let me take what I see other companies do, and maybe I can bring that back to my company and be an agent of change and have them improve things. So you're at a place for a long time. You kind of take how you do things at a certain place as, well, this is just how it's done. And so there's a number of instances, whether that's licensing or programs or compensation or how P&Ls work, that Cross Country does different than our prior company. And so I've learned a lot of things of how it can be done different. Not necessarily better. I love where I'm at. There's a lot of things that we do amazing. There's a reason why we're #1 by far. It's a, great platform. But so I think when you switch companies, there's things that you didn't even realize were possible because you're at a certain place for so long, right?
Yeah.
And a lot of LOs get into that. And I'm not advocating for every LO should be getting recruited all the time and taking visits. That can be very counterproductive. But like for 16 years, we were literally unrecruitable. We would not take a phone call. Like Dustin and I used to...
Speak for yourself. I would have. In 2019.
But we didn't.
I would have, yes.
But we
yes.
would mess with recruiters. Like they'd call us.
Oh,
and
yes.
Like, oh, yeah, I'll come. Give me $5 million or something stupid.
Correct. Yeah.
I had this one guy in the hook. Like he's like, let me check with my regional manager and see if it's possible.
But correct. But you are right. We were unrecruitable.
Yeah. We should have at least investigated to see what was out there, to see not just if there was a better platform to move, but are there things other companies do that we should have brought in-house? Because you work at somewhere for a long time with the same people, and it's a little bit incestuous. Right?
Yes, academic inbreeding.
Right, yeah. You're not looking outside to see what's better.
Yeah, it was interesting. First I was going to share this about the whole loyalty aspect, and I recently read this, and when I read it, it just resonated. Loyalty without alignment is abuse. Mm-hmm. Right? If you're being loyal to someone or something, but you're no longer aligned, mm-hmm. you're allowing that person that you're being loyal to basically abuse you. Right? So it's many of us are in those types of situations, whether they're personal or they're professional. The one thing that I learned pretty quickly is, what an elite organization we helped build. Mm-hmm. Right? Like when I left, I was like, damn. Like you don't get that perspective when you're working in. You only know what's in front of you. As you said, your blinders are on. Mm-hmm. So I realized that quickly. And then other things that maybe dawned on me as we talk about partnerships, I think when you're looking at any partnership, whether it's, again, your LOA, your loan partner, whether it's your spouse, or whether it's your business partners. Heck, we call realtors business partners, but very rarely do you treat them like a partner.
Yeah.
Right? They treat you like a vendor. You treat them like an account, mm-hmm. but you don't do what partners do. Something that we did a little bit early on, the first 10 years, and a lot less the last 7 years, we weren't doing partner retreats.
We weren't offsites.
We weren't doing coach. We weren't being coached by someone that was coaching the three of us. But at the same time, we didn't have alignment, right? If two of us want to do it, but a third didn't, then you're not going to do it. And I don't think it's either one of us at any one time, but it was rare that all three of us wanted to go do an offsite retreat, or that all three of us would want to pay for and have a coach or a consultant that we saw. I mentioned earlier marriage counseling. I mean, it was needed, and it made my marriage better, and I would go back in a heartbeat, right? But we weren't doing that. And then looking back, I was like, okay, at some point we went from being working together to partners to almost like co-managing. You know, I was like, okay, now we're co-managing. And I think at that standpoint, if that's you have two decisions. If you're in that type of situation, that's either your aha moment to sit down and have a heart-to-heart, hug it out, and realize that maybe you're no longer aligned, at which point you're either being abusive to them or they being abusive to you, or you spend the money, you go on the retreat, you hire the consultant, and you figured out how to get back aligned. Because I think looking back, that would have done us a lot of good if all three of us wanted it.
Right.
But if all three don't want it, then you can't do anything about it.
Yeah.
I mean, if you have a husband and a wife and one wants to stay married and one doesn't, you're not staying married. So like that was something that kind of stood out.
Yeah, I think, we were kind of different career stages, for a couple years, kind of going in different directions, but then the COVID market happened, and best 2 years everybody had.
Correct.
Income-wise, maybe not everything else, but like income in the mortgage business was incredible those 2 years. People are doing incredible volume. But then the post-COVID market was such a flip and such a challenge in 2022 and 3 that any challenges you had leading into that 2020 market became very apparent very quickly.
Yes.
Right? And that kind of made us start having some discussions. And that's why I left when I left, because, a hard market where we weren't being successful and our branches weren't profitable, that's kind of what led the conversations like, all right, guys, I'm not making enough money. This isn't working. What are we going to do? What's our game plan? And then that's ultimately what was like, and you said, it worked out good for all of us because you're doing what you want to do.
Correct.
I'm doing what I want to do, and David's retiring in 90 days.
Yes.
So the end result was good, but
yeah, I would have left in 2019 and started a mortgage company, but that's super risky.
But we had more productive conversations when I was thinking of leaving. Like, hey guys, this isn't working. Like, we need to figure something out. We had more for a few weeks during that, even though there was times where we were all pissed off at each other.
Yes.
That was more productive than like not meeting as a team, for 2 years because your hair is on fire and you're trying to just, paddle and stay above water during COVID. And so I think that the lesson for all that is like, if you're an LO, that needs to be you and your processor. Like, you need to have legit, frank conversations. I have a loan partner. I'm actually getting better at this, by the way, Dio. Nobody wants to fight, at least not me. Like, I'm not a confrontational person.
Confrontational person. I wish you were more confrontational.
Not as much anymore. Not as much anymore. But so I had a loan partner today who, something happened on a team meeting and they got defensive, and I'm like, I'm going to call you. And I walked outside and I was like, and we hashed it out. In 60 seconds, we were done and it was squashed, And so you have to have those conversations. If your processor pisses you off, you don't scream and yell at them, but tell them what disappointed you, and they should have the ability to do it back at you. And I think those conversations with any team, like, yes, we had a partnership that was $1 billion region, and we had to have those. And at times, if we didn't, it made things not run as smoothly. And when we did, it was like smooth sailing. But, with your personal team, or like if you work for a mortgage company, your boss, like your coworkers, like everybody, it's just a communication lesson, I think, more than anything.
Yeah. Something we didn't touch on, I know we're getting a little bit long here, but yeah, looking back, and these are like, by the way, I hope for me, and I hope for you at CC and for me at TLOP, I hope we get our second run, right? Like, I know you want to prove to yourself that you can do it again. I want to prove to myself I can do it again. Heck, even my partner, Steven, who Steven, because he was one of the first LOs to work for me. I mean, Steven sold his roofing company
he did pretty well.
A lot of freaking money. Like 10 figures, high 10 figures, right? But when you sit down with Steven in business planning like I did this year, you know what he wants to prove to himself? That he can do it again.
Yeah.
Right? Like, we want to be able to prove that it wasn't a fluke, that you could do it again. But I'm comfortable looking back at those 17 years saying, highlight of my career. Even if this is my bonus time, this is my fourth quarter, I'm going to win another Super Bowl, but I'm going to do it in overtime. Whatever the case may be, highlight of my career, But
if you look like Tom Brady, okay, so
yes,
Tom Brady's a Patriot.
Yes,
but that Bucs Super Bowl,
yes,
like made him the GOAT.
Correct.
Right?
Yes, yeah.
So,
I love that analogy.
Yeah.
Absolutely love it. But no, here's what I was going to share. Rarely did you, me, or David ever get our way for 17 years. For 17 years, like if you're looking at what do I need to do in order to be in a successful partnership, a compromise. Mm-hmm. Learn to compromise because I can't imagine there's a time.
I think we could take that to Washington. That might be effective.
Oh, Jesus. They can learn a lot from us. I mean, there were so many times that you and I would railroad David, right? You and David would stand up to me and say, we're not going to do that, right? And then there was times because we're each a little bit just selfish enough or narcissistic enough that we would still do it. However, it would be Mike raising a hand saying, fine, I'll pay for it personally, right? Or me saying, yeah, I will, like, cool. I want a producer. I'll pay for him, right? I want to do a podcast. I'll do that. It's always funny. I tell people the podcast looking back was me being extremely childish and selfish. I was bored at work and I wasn't willing to sit down with you and David and actually hash it out that I was unhappy and bored. But that's what it came down to. I was unhappy and bored. I needed something to excite me, something to drive me. And this at least gave me, it started 2 hours a week, it ended 10 hours a week of, something that I got excited to come to work for.
Yeah, I think, you hear like all these like trainers and coaches are like, what's your why? What's your why? What's your why? My kids, this, that. Okay. Your family's like everybody's why, right? But it has to be something more than that because like, yes, of course I work my, off to like support my wife and kids, but you're either competitive or, like you want to be number one, or it's a certain amount of money you want to make, or it's proving to yourself, or it's maybe proving to somebody else. But, I think like going back to the, the athlete thing, like athletics and sports, and that's why a lot of athletes are successful in business or, military as well. It's like it's discipline and drive and competitiveness. And yeah, I want to do 100 million myself in $1 billion as my region. Like that's
that's what's driving you.
That's my number. Yep.
Okay.
And it's not that I need the money to do 100 million or $1 billion. Like just like you, like whatever you want to build this into, it's not a money thing. It's just that to prove yourself you can do it. And something has to get you excited to get up every day, And for me and you, it's not playing 18 holes of golf 7 days a week.
No.
There's something else.
Yes, I live my life. Life is an adventure. I do want to leave everything I find better than everything I find. I want to leave it better than I found it. Yep. But I'm excited about shaping the future of the mortgage industry. I think we will own and operate a coaching company that is renowned in the industry as top 3 in the industry. Yep. And I want to do that for the next 7 to 8 years.
There's a big shift in the mortgage business happening right now, and the younger generation. So we're both. Well, yeah, you're 46. Yeah, you're 47.
I'm 47.
Yeah,
You'll
I'm 46,
be
couple months
until May. No, June.
Yeah.
Okay.
So, but there's a big shift, and like the sub 35, 38, that wave is blowing up. They're us 10, 15 years ago. Yes. And so there's this shift with new top producers, new companies, new blood. Same in the coaching space. And if people like us that have been around a while want to survive, and there's a lot of LOs 10, 15 years older than us that have a lot more experience, you have to find it within you somehow to like climb that mountain again, right? And a lot of LOs couldn't climb it after COVID because they climbed it for so long. They hit the peak and then they fell straight down the backside of that mountain. And a lot of them haven't been able to scratch and claw and get back up it. Some have, like I did it in 2022. I went from 72 to 36, and that was my wake-up call, right? 21 to 22. And 23 was brutal, but I got back above 50 because I scratched and clawed, got my knees dirty. But I think there's massive opportunity in the mortgage business. Like there's such little competition right now in the coaching space and in the origination space. There's how many companies are doing $3-4 billion a year, like a fraction of the number that used to. Yeah. And so that consolidation, just the people that are surviving today, I think like the next 5 years, you and I talked about it, like how hard was 2008 through 11, but then 12 through really
21.
Yeah. And in 1918 was tough, but then the COVID years, but yeah, there was, I feel like there's an 8 or 9 year run, like 2012 through 2019 was a great run. Like 2026 through like 2020, 32 or 3, could be that same kind of trajectory. And I know I want to be on that ride. I think, you do too.
Yeah, I'm 47. I want to go till I'm 55. Yeah. I hope when I'm 55, someone's saying, get the old man off the stage.
Yeah.
Like literally, why is that boomer logging in? I want to learn from someone else, because there is, I believe and I perceive, a changing of the guard happening. But I recently told someone, like, look, to make the money I want to make, using the skill set that I have in the industry that I love, I really have 3 options. Right, I can go do $100 million in personal production. I can build and run a $1 billion division, right? Or I can scale TLOP. But what I learned the hard way, I can't do all 3. If I did, I'd lose my marriage, I'd lose my mental health, I'd lose my physical health. Yeah. But I can do all 3. I chose the one that I at least have 60% ownership in the company. But more importantly, it's the one that when I lay in bed and I can't sleep, that's the one that's not pissing me off because I can't sleep. Yeah. Right? I got to a point to where I was great at doing loans. I did a lot of them, right? Didn't excite me.
Yeah, it wasn't
In
fun.
fact, as my therapist told me, you allow that to make you angry. I'm like, yep, I allow that to make me angry. But building and growing companies, that's super exciting. It's frustrating, it's hard, it's challenging, but it's super exciting, whether it's real estate investment, homeowners insurance, or it's a coaching and consulting business. Yeah. So let's do this, because I know we need to wrap this up. Let's do a rapid fire with Mike Smalley. If you were to get started all over again as a mortgage loan originator, what's the first thing or things you would do?
So, like, things I would do differently, right? So, one, I think most loan officers are very poor at staying in touch with past clients. I think we close them, we intend to follow up and call and do annual reviews, and people just don't because they choose to do something else, right? Usually that's like working on a loan file or something like that may not be, productive. So staying in contact with your past clients in multiple channels. They have to follow you on social. They have to be in an email and a text drip campaign, but you also have to pick the phone up and call them. And so the cadence we use is Thursdays is our past client theme day. The first week of the month, I call people 6 months past closing, 6 months ago. Second week, 12, third week, 18, fourth week, 24 months. We're getting ready to double that and go back 4 years because we're really in a 4-year window. Like anyone who closed in the last 4 years is a potential refi candidate if rates hit certain numbers.
Okay.
And so that's something that I wish I would have done. And every time interest rates drop, I feel like there was always more refinances to squeeze than we got, right? And there were 2 years where we crushed it with refinances, but there was always more opportunity. And the other piece of past clients is they also buy other houses. And I think we think of it only as a refi opportunity. A past client who bought a house in 2020 at a 2.5% interest rate might buy an investment property today, right?
Yep.
Like it's a great time to buy. There's 46% more sellers than buyers in today's market. If I'm not keeping in contact with that person because I'm like, oh, they're not a refi candidate, I'm missing opportunities. And so that's a big one. And I think most top producers would probably share that as well. It's just we could all do better with our past clients.
What's one thing that you did in your career that you're like, hell no, not going to do that again?
A radio show.
Okay.
And it was at a time where radio was shifting. And now like Bruce Woodburn, who's in this market in Orlando, I think he's still on the radio with Cleve Loveland. But the one I was on was ineffective, super expensive. The most expensive marketing I ever did. It was like $3,000 a month, 15 years ago. And I think a lot of you have to be either a referral based B2B or, your sphere, or you have to be consumer direct. It's hard to do both. And if you're going to go consumer direct, there's got to be strategic ways you do it. And so I blew money on some big Zillow ad spins with realtors that weren't great at following up with leads, that didn't convert them because you've got to have a great realtor partner to make those work. The radio was probably the most expensive thing I did that just paid no dividends.
Yeah, no, I know one guy who does it well, Dave Hochberg up in Chicago, but he's on WGN radio, and he's so good at this standpoint. He has advertisers that pay for his airtime, so he gets to do the show for free, and potentially it may even pay him.
Yeah, some people make
it may
money
even pay him, but that's like most things in life. We talk about the outliers, but rarely are we going with the outliers. Yeah. What is something that excites you about the future of mortgage
lending? So I got one more for you.
Okay,
because this will tie you in. So years ago, you probably mentioned Kevin on the show, right?
Yes.
So Kevin was
usually call him Murph, but yeah.
Murph. So Murph and Dio went to high school together, and Dio's like, I'm gonna hire Murph to be my loan partner. And I'm hiring Murph to be my loan partner, not because I want to make more, but because I want to work less.
All right, so last question here, Mike. What is it that you are looking forward to when it comes to the mortgage industry?
Yeah, I think the biggest opportunity is, we talked earlier about how hard that 2008 to 2011 market was, but how good the next run was. And that was because there was a major thinning of the herd, a lack of competition. And I see that in the marketplace today. There's not a lot of new blood in the business. Like we built Waterstone with a rookie loan officer program that's kind of like your originator launch, very similar. And there hasn't been much of that in the last couple of years. And so as people age out and retire, and there's a lot of people that rode off into the sunset, there hasn't been new blood filling in. So, I don't know what the numbers are. There was like 500,000 NMLS licensees, and now there's like maybe 80,000, or I've seen some numbers
I think
like
it's down to 250. But at the end of the day, people who are full-time active originators is closer to 70 to 80,000.
Yeah.
You have a lot of banks and credit unions who everyone in their branch is licensed, whether you're a teller or you're doing credit card processing.
Yeah.
So I think active license full-time, we're about 70, 80,000.
Yeah, but I think the lack of competition, we've had 3 really challenging years. If you look at statistics, lack of refinances, lack of purchase activity, like NAR home sales. Our average loan amount, because of home prices, has gone up. Everybody's making more money per transaction than I could have ever imagined. Mm-hmm. I closed 4 transactions last week, and the average loan amount was like $750,000.
Holy cow!
Just doing like jumbo bank statements and things that we didn't have. So I think the next 7 or 8 years is poised for an incredible run. I think the market's going to turn really quick if rates get below 5. I don't think they're going below 5.5, but I think you're going to settle sub 6, and I feel like that opens a tidal wave of buyer demand and refinance business as well. So it's a great time for those that survived. And if you're struggling or thinking, is this the right career for me? It's like, don't quit now because you've made it through the tough times. Like, prepare for the feast because the feast is coming, and it may be within months.
Yeah, I'll tell you, I get to travel the country now for work, right? It's what I do. I support the mortgage industry, and there's a lot of old dogs. And I don't say that in a bad way, but just people with 20, 30 years experience, maybe 40 years experience. They're set in their ways. They're happy with what they got. They're not getting after it. Mm-hmm. So if you are someone who's wanting to get after it, Mike's telling you now's the best time since probably 2009, 10, or 11 to be wanting to get after it, to gain market share, to build your personal brand as well as your following. Mike, I so appreciate you coming by. We're going to have to do this more often, I think. We'll have to figure out how that works. If people want to get a hold of you or follow you, what's the best way to get in contact with Mike Smalley?
I'm on all the social media, so Mike Smalley 2323 is my Instagram, and I actually answer my phone and like using it, so you can find my phone number anywhere. Just
what is it? 407-367
9190.
9190. It's amazing. I don't have that many people's phone numbers memorized.
Yeah.
Somehow that number I still know.
You might have punched that one in a couple times.
It's that one and probably like 407-830-5086. That was my phone number growing up.
Yeah.
I still know that one, but I couldn't tell you that many people's numbers. Hey, y'all, I know we started off this entire episode talking about partnerships. If you are a loan originator, a mortgage broker, or someone in the mortgage space, and you're contemplating a partnership or you have questions about a partnership you're in, I have recently launched TLOP's Career Advisory Services. It's a free service. It's an opportunity for you to get one-on-one with me for 15, 20 minutes and let me be a third-party, unbiased person with experience to get you pointed in the right direction or share with you a different point of view. Right now, if you want to get a hold of me, just go to my LinkedIn, first name Dustin, last name Owen. You can always email me, do@tloponline.com. But I'll tell you, LinkedIn's probably my preferred way. And then from there, I'll send you my Calendly link. But it's a service that we're offering, and I'd love for you to take advantage of it if you have questions, especially when it comes to things Mike and I talked about today. Other than that, if you like this episode, and maybe you're tuning in because you're one of Mike's colleagues at Cross Country, but you've never tuned in before, I say thank you. If you're on Spotify or Apple, give us a 5-star review. That's how you can get more people to know that this content exists and it doesn't suck. I love it when you go to our YouTube channel and you subscribe. YouTube is a great place to watch the podcast, but it's also chock full of additional free content. I'm talking Coach's Corner, Mortgage School, Talk Mortgage to me, as well as the DO Show. All free content just for you. If you haven't done so already, you need to make sure you've signed up for my newsletter. You can do so on my website. The newsletter is free. I write it. It comes out every Thursday. Website is tloponline.com. That's TLOP online.com. Go ahead and sign up for the newsletter. And if you do, I'll invite you to one free masterclass that I host every single month. He's Mike Smalley. I'm Dustin Owen. That's all the time we have for you today. But we do look forward to catching you on the next episode. Peace.